Did real estate market health improve in March? Well, let's find out. I am Justin Miller, principal and co-founder of the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people build wealth through real estate. So let's go ahead and look at a little bit of background just for a minute, and then we're going to dive right into the numbers. This video is going to be a little bit quicker than normal, but I'll cover all of the information. So the first thing, as to real estate market health, remember the March update, which was the February data. That suggested that the real estate market in Las Vegas had actually become quite unhealthy in February, and that was because we saw activity going down both on the buy side and on the sell side, contrary to normal seasonal patterns where we should see improvements in demand and in supply in February. So we want to contrast in the April video, this video, the March data with the February data, and also looking at March year over year, so March 2025 to March 2026, to see what's taking place. All right, so that's the first thing. But what about the background of what's actually been taking place here in the market generally as we look at the March data so that we can understand some of the March data more specifically? Well, the first thing to note is that there's been dramatic uncertainty, right? So at the beginning of March, effectively, the very end of February, we ended up in the Trump war against Iran. And that closed the Strait of Hormuz, at least to a significant amount of traffic for oil tankers and for fertilizer shipments and things like that. So this level of uncertainty, very high. And by the way, as I record this on the 7th of April, this is perhaps maximum uncertainty day. I can't wait. I've got deadlines I need to be making, so I can't wait to see what transpires overnight. But tonight's the latest deadline that's been announced for whether or not something's going to happen in Trump's war. So we'll find out. I don't have hopes for resolution and significant decrease in uncertainty, right? That's not been the history of what we've had for the last year. Uncertainty seems to increase constantly. And so that's something that we're going to have to get used to. It's challenging, right? Most people don't exist well in an uncertain environment. Actually, it's something that I don't necessarily like the current level of uncertainty and type of uncertainty, but it's something that I am actually well prepared for and trained for. So if you're looking to go through a real estate transaction, reach out to me and I'll help you deal with the uncertainty. Well, what else is there? So gas prices, right? Gas prices over this past month have gone from approximately $3.10 a gallon up to, we went past a gas station the other day here in Las Vegas, $5.29, but on a national average, gas prices about $4.30. So gas prices are up by about 40% from 1 month ago. Of course, health insurance, we know health insurance has gone up by 100%, 110% or so on average across the country since the beginning of the year. We know that inflation is up, regardless of not yet having the final numbers for inflation in the month of March. We're going to see inflation elevated for multiple months this year and quite possibly through the end of this year. Okay, so that's just the reality. That causes the Fed to have a hard time with interest rates. What do they do with interest rates when inflation is going up? They generally increase interest rates to slow the economy, to get interest rates to fall. But there's some concern about the strength of the economy. So unemployment has been hovering in the 4.3, 4.4 range over the past few months. And while the employment numbers, the number of people employed or newly employed in the economy, were released for the month of March last Friday, showing a significant increase in the number of employed people, there's some real concern as to whether or not that data has been manipulated. And the number for the month prior for February was down, loss of jobs in the economy, approximately the same amount that we saw gained in March. All of this uncertainty has been driving interest rates higher. So we started March with 30-year fixed rate mortgage interest running approximately 6.1%. We actually saw at the very beginning of March, nationally, interest rates come down to 5.99%. And that's the second time we'd seen that happen this year. But they've quickly bounced back up, and they're just about 6.5% as I record this. So we've seen interest rates throughout the entirety of March for mortgage interest rates heading back up, right? And it's not just mortgage interest rates, it's 10-year treasury rates, etc. So this suggests that the bond market, which determines longer term interest rates, is losing some level of confidence in whether or not the Fed can control the economy through monetary policy. And so we may see the Fed even desire to move interest rates down. It's not clear that that's going to happen. We actually are in an increasing interest rate environment right now, irrespective of what the Fed does with its policy rate, with its overnight Fed funds rate. Okay, so that's the backdrop to what was happening in March, and as we go into April, what is still happening. All right, so then let's go ahead and look at the statistics for the month of March. Now, in March, sales price, median sold price for single family homes, $470,000. That's up $1,000 from $469,000 in February. But basically, we had been flat, right? It's up 0.2%, but we've been flat for half a year at $470,000, right? Plus or minus a very small amount. So prices remain flat on single family homes. I will say it's actually down 1.0% year over year, meaning from March of 2025. And that's just because while much of 2025 we saw single family home prices, the median sold price, remaining at 470, we did have fluctuations up and down on monthly bases. And in March of 2025, we had been a little bit higher at 475. So we've come down 1.0% year over year. But we're flat month over month. We're basically flat in this environment for single family home prices. What about condos? Well, condos for March are literally flat priced at $221 relative to February. We're down 6.0% year over year, right? And I had commented on this in the March update that in condos, we're seeing some significant pricing pressure on the downside. We're flat in March, which is great. We're not going down further, but it's still something to note is condo prices have been weak, where single family home prices have been holding at this 470 level for quite some time. And by the way, just to contextualize the 470 slightly more for single family homes, that 470 is $10,000 below the absolute peak that we had ever hit for single family homes in Las Vegas, right? So we're up near the very top of the market in pricing terms, right? We're not seeing weakness in price. It's something to note because a lot of people, for some reason, want to pretend that there's something else going on in the market. The actual information in the market is just very flat and stable. So the question is it flat and stable because nothing's going on, or is it flat and stable because there is stuff going on and we've seemed to have reached an equilibrium price? Well, we'll see more about that in just a minute, but let me give you also townhomes here. Townhome prices, $330,000, that's up $4,500 month over month, or 1.4%. It is down 4.3% year over year. Okay, so townhome prices were actually stronger than all others in March, but were a little bit weaker than single family homes year over year. And so the entire multifamily submarket or multifamily complex has been down a little bit stronger than single family homes. So a pricing insight, and that is with regard to the median price per foot. for sold properties. And so I look at this to understand what might be going on across the market. And so price per foot for single family residential in March was actually flat, right? So we saw the median sold price go up slightly, and we saw price per foot flat. And so that suggests that, we're certainly not seeing relative strength on the upper end of the market. We're not really seeing relative strength on the lower end of the market. We're seeing a market that's treading water in terms of pricing. Now, with regard to condos and townhomes, median price per foot did actually go up. It's interesting because condo prices as a whole, median sold price on condos was flat. And so we did see some significant improvement with regard to price per foot, suggesting that higher end condos might be absorbing some of the demand in the market for higher end properties. For townhomes, we also saw an increase, but we also saw an increase in the median price per sold price for townhomes. And so that suggests actually that townhomes were operating across all portions of the townhome space approximately evenly. Okay, so now let's go ahead and look at sold data. Remember, sold data is our demand measure. It tells us how many buyers actually wanted to buy a property, were able to negotiate to buy a property, and closed on that property. Okay, so for single family residential, the number of units sold and closed, 2,079. Now this is up pretty substantially. This is up 596 or 40.0% month over month. That's great. Now remember, in February, we were not up in the ways that we would expect seasonally. So we've captured back the seasonal problems, the counter seasonal problems from February of 2026. And we're seeing really good growth in numbers from March. We don't know what's happening necessarily going forward just based on this. We'll look at some more data in just a second about that. But we're up month over month, 40%, 596 units. We're up 7.3% year over year. Now, this is interesting and important to recognize. Remember that 2023 had been the slowest year in residential real estate in Las Vegas in a generation. 2024 was slightly better, 2.2% better, and 2025 was weaker than both 2024 and 2023, right? We came down, I forget the exact number, but like 4.3%, something like that. So we've been treading water in terms of sold activity here near the bottom of the market in terms of number of transactions. Generational lows. Okay, so we're up relative to where we were last year, where we were the weakest year going back actually to the 70s on a per capita basis. So that's great. But we're below the 2023 level for March single family home sales. So that's kind of interesting, right? Because 2023 had been the second weakest year in a generation. Okay, so it looks like we're up strongly, but don't let that confuse you to think, we're off to the races, everything is fantastic. It's a very constrained market right now in terms of level of activity. Now, condos, 233, that's up 22 or 10.4% month over month. It's down 10.7% year over year, and it's weaker than the numbers we saw in 2023 or 2024 or 2025. Okay. So what about townhomes? Townhomes, 201, that's up 3, not very much, but it's up 1.5% month over month, and it's down 17.6% year over year. Now, in February, we actually saw townhomes go above the prior year number, not in March. So we're below the 2023 level, we're below the 2024 level, we're below the 2025 level. So in the multifamily space, condos and townhomes, we're below the levels that we had seen in any of these past 3 years. Well, actually, in 2026, if we take the entirety of the market, right, all houses, all properties that sold, we are below on a cumulative basis 2023, 2024, and 2025. So that means that even though we saw a really significant increase in demand, 40% increase in sold unit numbers in single family homes, the overall market, it's still very weak. Literally, we are below the levels that we've seen for 2023, 2024, 2025. We are below levels that had been the generational low. Right, going back 50 years, going back to the mid 70s on a per capita basis. All right, the second insight, pending, that's contracts that have been written but not yet closed, pending numbers are up strongly in March for both single family homes and for townhomes. So that's really encouraging. They're up strongly, but that means seasonally, not more than seasonally. Now, that doesn't mean that we'll be able to recapture above where we had been, but at least it means that we should be able to maintain where we've been, maybe grow a little bit relative to 2025. So that'll be interesting. Condos, on the other hand, very weak for pending. So that's a problem. All right, let's turn our attention now to supply, right? So we looked at demand and we've looked at pricing, obviously. Supply, that's the inventory that's sitting in the marketplace that's ready for sale, okay? So this number is interesting. Single family homes, 6,693. That's down. It's down 157 or 2.3%. Now I'm going to caution you, these are the March numbers. This is clearly the home buying season, right? This is when we expect inventory to be building strongly and we expect sales to be building strongly. And we actually saw the demand pick up, at least with regard to single family homes, right? Well, supply went down. We are up 6.0% year over year. So that's good. Condos, 1,572. That inventory is actually up. It's up by 24 condos or 1.6% month over month. It's up 6.6% year over year. A very weak level of inventory growth in reality relative to seasonal norms for this time of year, but at least there was an increase in inventory in the condo space. What about townhomes? Townhomes, 1,146. That is literally flat from February, so no growth, no shrinkage from February. It is up 23.5% year over year. You'll remember that we have been looking at significant year over year gains through much of 2025 vis-a-vis 2024. Right, when inventory was really weak, and we saw inventory gains in 2025, and we'd seen 11 months of sequential decrease in level of inventory gain until March, and we actually saw increased inventory year over year in March for the first time in 12 months. So that's kind of interesting. The inventory gains are weak; they're below seasonal norms. Except in townhomes, just about normal, but we are not seeing real strong inventory growth here. In fact, we're seeing weak inventory growth. So 2 insights. The first insight is, as I was just saying, way below normal for seasonal growth in inventory. The second insight, and this is important, critically, new listings did grow. They grew in all submarkets, which is a real change from February when we had seen new listings, that's newly listed resale units coming into inventory. We had seen that going down in all markets, all submarkets in February. Well, we actually saw growth in all submarkets in March. So that's really good. The growth that we saw was approximately seasonal. So we're looking at constrained inventory. We're looking at generally decreases in inventory since earlier in the year. We're looking at increased new listings, which is increasing inventory levels somewhat so that's the supply side in a market where demand is clearly existing at prices that are flat relative to where they've been for the past year approximately. Okay, now the one other statistic I look at every month, and that is back on market or contract failures. And remember, back on market means that a contract had gone pending, where buyer and seller negotiated, got into a contract, it's a pending contract, had not yet closed, and for some reason that contract failed and the property was relisted. So the failure statistic that I use for transactions that have failed is back on market because I can get that information. The failure rate itself is going to be slightly higher than the back on market number, right? Because failure is going to be all back on market plus those contracts that failed where the property never came back into the market. Unfortunately, that means back on market's an undercount, but I'm not able to get adequate data to know what that undercount is. It's going to be fairly small because a seller who wants to sell their property, something doesn't work, more often than not, they're going to say, well, let's go ahead and try again. Sometimes they may say, I'm out of here, I'm not going to do it, let's take the property off the market and not relist. But the majority of the time, they'll go back into the market. And so that's the proxy I use for contract failures. Remember, this has been really elevated since October of 2020 when I started tracking it, right? As the economy was reopening after the pandemic. Well, for single family homes in March, 706 contracts failed and came back into the market. That's 25%, 25.3% of all contracts on single family homes failed. Hugely problematic. Condos, 118. That's 33.6% of contracts failed and came back into the market. Over a third, literally over a third. And townhomes, every bit as bad. 101 townhome contracts failed. 33.4% of townhome contracts failed, and those townhomes came back into the market. Really, really problematic. And so if you're thinking about buying or selling, you want to make sure you're protecting yourself from these contract failures, as well as understanding what's actually taking place in the market. Please reach out to us. I'd be happy to be able to help you. And by the way, subscribe, hit the like button, notification bell, but more importantly, share these videos with your friends, your neighbors, your family members, your colleagues, anyone you think might be needing high quality information about what's going on in the real estate market, in case they might be thinking about engaging in a transaction in the market. There are some things to recognize here. Transactions may be very viable, but they also may be, subject to massive levels of uncertainty right now. And I suspect the uncertainty problems are not going to go away. They'll just change shape as we go through the majority of 2026. So anyhow, that's it for this market update. I will see you in the next one. Thank you. Bye.